Hi there, I'm Justus from TA25, a third-year accountancy student currently studying in Ngee Ann Polytechnic. In today's video, I'll be talking about the familiarity threat that may lead to problems complying with EP100, the code. A familiarity threat is when professional accountants and auditors are closely related or have some kind of relationship that might affect their professional judgment while doing their jobs. I will also be talking about fundamental principles that are being violated and the safeguards that can be used to eliminate or lessen the threat. In my scenario, I'll be presenting from the perspective of Justus, which is me, a professional accountant working in an accounting firm, Best Private Limited. The other character involved, which will be represented by this, will be Richard, my brother, an auditor working in an auditing firm, Great LLP. Great LLP has been employed by Best Private Limited to audit their financial statements for the financial period ending 30th December 2020. So this is my scenario. I was given the task to prepare the financial statements for Best Private Limited on short notice. Because I had very little time to prepare the financial statements, I rushed through it and therefore was not as attentive to detail. Little did I know, I accidentally reported an increased amount of revenue. These financial statements were then sent to the auditors at Great LLP to audit. Richard was then assigned the task to audit these financial statements that were coming from me. He was pretty happy to hear about that. Since he knows that his brother, which is me, prepared those financial statements, he trusted me to have not made any mistakes and skip over auditing my financial statements. According to the prescribed framework of the code, I have to identify and evaluate the threat. It was identified that there was a clear familiarity threat in this scenario. This is as Richard and I were brothers, and Richard is supposed to audit my financial statements. It is stated in section 300.11 of EP100, the code, that a professional accountant should not be responsible for the employing organization's financial reporting when an immediate family member is employed by the entity that makes decisions that would affect the entity's financial reporting. So there are two fundamental principles breached due to the familiarity threat. Objectivity would be breached as Richard was biased towards his brother, which is me, in thinking that he would not make any mistakes. This shows that Richard's professional business judgment is clouded by the familiarity threat. Next, his professional behavior was breached as due to Richard's mistake of not checking through my reports thoroughly. This would lead to a mistake in the financial statements, which will discredit the auditor profession. So this shows that the threat was significant. Thus, I would have to determine and apply the safeguards. One safeguard I would recommend would be to check the independence of the auditors to make sure that there are no relationships between the auditors and the client. This is so that the auditors would not have a biased opinion. If there isn't any relationships between the auditors and the client, the company would be able to work together. Another safeguard will be that the auditors review each other's work so that no mistakes are made. If all the safeguards fail to reduce the threat to an acceptable level or eliminate the threat, Richard would then have to resign from the employment according to the prescribed framework of the code. If he continues to engage with Best Private Limited and audit the financial statements, he will be violating Code EP100 ethics for the professional accountant. Thank you.